What we're going to do is we're going to do basically all the cash revenue and expenses that would be on our income statement, so we have a cash income statement. But then we're going to make what we consider accrual adjustments. And that allows us to take advantages of both. We do the easy stuff in terms of cash. We have a cash basis one. We can use that for taxes. But then if we go ahead and make some accrual adjustments, we can get that bottom line accurate picture of our net farm income because we've made some adjustments. So accrual adjustments are simply adjusting for accrual type of items that have happened during the course of the year, okay? So it reflects those activities that have occurred that might impact your income statement, but you haven't actually paid the cash or received the cash yet, okay? So the way that we do that to make an accrual adjustment on your income statement, we simply take the ending value of that particular item minus where it started at the beginning of the year, and we look and see how it changed. So let's say, for example, we're taking your hay inventory. If you began the year with $10,000 in hay inventory and you ended the year with $15,000 in hay inventory, we would make an accrual adjustment on the income statement to show that additional $5,000, ending minus beginning, 15 minus 10, there's an additional $5,000 worth of hay that we still have on hand that we produced this year. We produced it, we have generated it, but we have not received the income on it yet because we haven't sold it and gotten the cash. It's still income to us from an accrual standpoint. So from an accrual adjustment, we simply look at how that particular hay inventory has changed and we compare those ending and beginning values. So as we think about that, here are the major inventory adjustments we make on an accrual basis in our income statement. We make a couple of different revenue accrual adjustments, okay? We had changes in inventory, so that would be like hay inventory, grain inventory that's in the bin, might be feeder livestock inventory that's still on hand. We have them and we have them in the pen and we're still feeding, but we haven't sold them yet. So changes in inventory of products that we are currently using, feeding, storing, whatever it happens to be. We also have accounts receivable items where we've done something and somebody hasn't paid us yet. We're going to make adjustments to those. So that's a case of doing some custom work income and not getting paid for it yet. From an expense standpoint, we have three different major categories that we look at. We look at our accounts payable, things we've charged on account to, like the feed store, for example, like I gave you. So how has that changed? What has our adjustments been in terms of what we have done in our accounts payable? We also, the big category is whether or not we paid some prepaid expenses or not. So prepaid expenses are one of those that's a little bit different, and as we go through and do practice income statements, you'll see how that works. But basically, here's what happens. If I prepaid at the end of December in 2019, I prepaid expenses that are actually for 2020. Then when I make an accrual adjustment to my prepaid expenses, instead of showing more expenses in my accrual adjustment, what I do is I actually do the opposite of what has occurred. So in the case of my prepaid expenses, if my prepaid expenses have increased over the course of the year, and I ended up with more for the year than what I started with at the beginning, then actually that's a negative effect on my expenses. It made my expenses too high for what I really did for this year in 2019, because a bunch of those expenses are for the next year, 2020. So what I want to do with those extra expenses that aren't part of the 19 production year, I want to take them out. So I actually subtract them. So if I have an increase in prepaid expenses, I actually make it negative and I subtract it out. You'll see how that works when we do some practice ones. The other things I might have some changes in is I might have some changes in other accrued items, which would be accrued interest or other accrued expenses. Accrued interest is the big one. I might have some changes in my interest expenses, so I want to show that that has changed over the course of the year. So as we think about how those fit into our income statement in terms of where they fit, basically what happens is in my revenue section, I list all of my cash revenue. One thing I do with a gain or loss from the sale of breeding livestock is instead of putting that down here with the capital assets we talked about earlier, machinery, equipment, buildings, or land, if I sell some breeding livestock and I've sold the cull cows in this case, which is an operating part of my business, I want to put that gain or loss up here in my revenue section. The reason why I want to do that is my net farm income from operations, everything above this is operating items. I want to show that I sell cull cows every year. It's an operating activity for me. So since it's an operating activity, I want to put that up here in my revenue section. So then what I'm going to do is I'm going to have all those operating revenue items. I'm going to have the gain or loss on an operating item in my cull cows. Then if there are some accrual adjustments to make, I'm going to show those changes right here. That's going to be able to impact my revenue, and I'll get my total revenue after I've made those accrual adjustments. I do the exact same thing in my expense section. I list all the operating types of expenses, and then when I get down and I've finished all the cash operating expenses, then I make adjustments for any accrual items that maybe have changed, like a change in accounts payable or a change in prepaid expenses. My interest expense section does the same thing. I list my operating types of interest, and then if there's been any changes in accrued interest, then I make that accrual adjustment here. So that allows me to give myself a cash income statement with adjustments for accrual adjustments. And my bottom line is I've got an accrual income statement, but I didn't have to keep maybe quite as elaborate of all of my information so that everything was accrual. I have cash blended with accrual adjustments, and then I have an accurate net farm income from that.